Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at the charts, like the chart behind me, which is of the UVIX, which is the 2x long VIX futures ETF, which VIX is, if you're not aware, is the volatility index. And yeah, this is a nice way to trade it because you can do it without trading options. But with that being said, I am covering the UVIX in the weekly options video that will be coming out later today. So if you do want to learn more about UVIX, I recommend checking that video out. It will have timestamps so you can skip right to the UVIX. But yeah, I just wanted to do this video. It's going to be unedited, so sorry about that. But I really just wanted to kind of dive into my thought process with this, explain it to you guys, and really just kind of lay it out there for myself as well. Because, I have been trading the UVIX pretty much ever since we had this big move to the upside, just kind of made me realize there's a lot of potential to make some money with this, and it is a hedge. It does serve as a hedge. So this day when we hit a high with the UVIX of 19.97, so almost $20 per share. It's an ETF, so I believe those would be shares. And that was on August 5th. If you look back on pretty much any chart, you will see that on August 5th, that was the bottom. Markets gapped down and then rallied. And so, with the UVIX over here, we just had this massive move to the upside, and you don't have to deal with expiration dates of options with the UVIX. And so, I kind of like it because of that. And, I also should note that while this is 2x leveraged VIX futures, if we do look over at the VIX, you actually get a smaller return with the UVIX, whereas with the VIX, you would get a larger return. And so, I find that kind of funny because I would expect the 2x leveraged ETF to give you double returns. But I believe that the reason why you don't actually get those double returns is because of contango and dealing with futures and rollovers, stuff like that. I'm not really too familiar with that stuff, but that is just my understanding of it. But with the VIX, what I wanted to go over here very quickly before diving into the UVIX chart is that, I kind of had this rule of thumb. I was introduced to trading the VIX or UVIX based on if the VIX, if the volatility index goes above $20 a share, where I have this alert here, then we could see it skyrocket. But what we've seen following that big move up to 65.73, with it currently trading at 16.14 right now, below 20, is that what we've seen following that big move up to 65, we've seen a number of bumps above 20 that didn't really go much higher. They went to 23.31, or over here went to a high of 23.03. So that's like, a 10, 15% swing from 20 up to there. So it's really, not that appealing. And with it being below 20 right now, I actually think that right now is the time to be accumulating, or really over the past week and into the next week, because I've noticed this pattern with the VIX, but also with the UVIX, that it kind of has a 2-week pullback cycle followed by a 2-week rally cycle. And based on this little doodle that I have here, I just left it up here for fun. I am going to do some shading and drawing, some technical analysis. I just have that up there because it's fun. And if you do notice, we did get to, the bottom of this kind of 2-week cycle, going from the top to the bottom. And then so now I think the next 2 weeks we could be rallying potentially up to, $6.16. So from current price, let's see right here, up to that level, that's around a 58% swing, so very nice. But before I make that measurement tool go away, I should measure up to this downtrend that I have here. That could be, a 40% swing. So, it's not, hundreds of percent, but, anything above 10%, I think that's a pretty nice swing, especially over 2 weeks. Much better than you'd get in a savings account. But also, of course, this is risky. None of this is financial advice. And, before I get into the kind of shading and the technical analysis, I guess, what I personally have been doing. The last video that I made was when price was up here, I believe on November 1st, and I was kind of wondering, if it was going to continue, going into the election, or if it was going to start to pull back. And what we saw that following Monday on the 4th, just before the US election, we saw it actually pull back. So it was getting rejected from this downtrend here. And that did correspond with, this, I guess, 4-week cycle with 2 weeks down, 2 weeks up. And so, I just find that to be really, really interesting. And I do think that there is really nice potential to get up to at least, 40%, getting up to, let's say, just, where this gap was, but then we gapped here again. So there's just, a lot of gaps over in this range, right around $5.32 where that dashed blue line is. But if we do go up to this uptrend, right here where there's that intersection, that would be a price of right around $5.50. So what I had been doing, not knowing if this was going to continue higher or break lower, I started a small position right around here. And then I started accumulating because basically when it started moving down quickly here, I had some orders filled. I think I had one or right around $5, maybe $4.95. Let's see, if you know me, I do my trades on my phone, so I'll just pull it up so you guys can get to know the exact numbers. And I should say, casual stuff like this, I do this Sunday nights. Usually I do miss them sometimes just because I get tired from streaming, making videos so much. But Sunday nights, 9 p.m. Eastern. And so let's see. I've just got all of my orders up here. So I started buying at 532, which was this gap. I was expecting it to pull back to that. And then I started getting more. Let's see, I guess at $5, and then another buy $4.29. I think that was, I had a buy placed at like $4.90 or $4.95, but because it moved down so quickly, I got a fill. Yeah, I think following this gap here, I'm just going to remove those drawings so you can see it better. Following this massive gap, I think I had an order placed at, let's see, it's probably based on these levels. Probably 466, I believe I had an order placed there for 20 shares, but that got filled at 429. So, right around where the cursor is here. And then I've just been accumulating a little bit more. Got some more at 369 just for fun because that's a fun number right around here. Did get some more over the past week at 350. And then yesterday, I'll show this, I bought some more at 376. The reason why I picked that level, if I do go to, I believe, the 1-minute chart, we can see, the price action. So I started to see this going up higher. And then I was thinking, well, where's a level that had acted as some support in the past or some resistance, just looking at the short time frame. I think it was getting up to around $4 a share, and probably up here around like 392. I was thinking maybe it'd pull back a little bit, but not to 383. I was thinking that this kind of like double top here, maybe that'd be acting as support. And so I just saw like the high here, I believe that will be 376. I just saw that and was like, oh, well, if it pulls back, I'll add more to my position. And so that got filled because, during market hours, we didn't pull back to that level. But during the after hours, we did. It looks like we hit a low on this minute at 370. And so, my buys are just 10 at a time, so nothing too crazy. And right now I just have 70 of these. And I should share what my average is, if in case you're curious. And, of course, this is not financial advice. My average as of right now, because I was buying when it was, let's see, got to get those drawings back and just zoom in over here. Sorry about that. Because I was buying, when it was, at 532, and my average is a little bit higher, than current price. My average is $4.26.4. And so my plan is, I don't have any sells placed, but I definitely think it could be getting up to this downtrend. And so whatever percentage that is, I do the math in Excel, divisible by 10, percentage points, I would just probably sell right around 532 or, around this downtrend. But I might be trimming at 10% increments on the way up. So that's kind of my thesis. And if it does start to look like it's getting weak, maybe it's bumping into some resistance around here. So that uptrend, is based on these two pivot points. That would be if price was getting up to, let's see, right around 471. That would be above my average. So maybe I'd sell the majority of my position there if I felt like it was getting stopped there, but maybe be forming a bull flag. But anyways, I'm going to stop rambling so much, and I'm going to get to drawing the shading of these cycles. And I am going to delete this fun drawing that I have here just so it's a little bit cleaner. And I will, kind of go over some of these fib levels too, just so we have, basically, a technical backing based on these levels. And so, yeah, I mean, here from this move from the low at the end of September, so September 23rd, up to the high at the beginning of October 7th, do that Fibonacci retracement there. The 786 is right here, so I'm actually just going to remove all of those levels other than the 786 because I don't think they're really too important. And then also from this one here, this Fibonacci retracement going from the low hit on August 30th, which, arguably I could have done that from the low over here at 402, but, it's just 1 penny difference. This is 403 hit on August 30th, going up to the high September 6th. So that Fibonacci retracement, we got that 786 at 460.1. And, that does seem to, if I just zoom out appropriately, that does seem to coincide with the 786 over here. And also with this uptrend, and that uptrend is based on that low of 403 and the other pivot low from September 23rd, beginning this next retracement, and that was at a price of $4.20. Gotta love that number. And so with this uptrend and that coinciding over here with those two 786s, that makes me think that this very likely could be topping out right around 460, but maybe, like I said, we do get up to this downtrend over there. And so that downtrend, which I think is super cool, but before I get into that, I am just going to, actually, I'm going to leave this one here because, talk about these retracements, the 786 from the high that we hit on September 6th, coming to the low that we hit on September 23rd, doing a Fibonacci retracement from there, the 786, predicted both of these tops very nicely, kind of a double top, but really kind of a triple top here because this was just a wick above. So, I think that is just really nice. I really like Fibonacci retracements. I think they're very useful tools. But, of course, we have broken below all of these levels. And so, maybe this uptrend is resistance right around 460. Maybe this downtrend is resistance. Maybe I want to leave that gap there right around 532. Or, actually, maybe I don't want to leave that there and I just want to draw a line at 550 because I find that to be, just like a psychologically pretty compelling level. So 550, where can I draw these? These are kind of like lock into the points. So doing this here, I'm just going to have to manually adjust this to 550. So we see that level that is locked into place. I'm just going to make it actually pretty thick because I think that's going to be like a wall, and I'll color that red. So that's where I think price could be coming to. But, I think that, I'll color this one yellow and make that a little bit thicker because I think this one could be some more notable resistance. But anyways, the point of this video is to kind of draw the shading of these cycles and to really just kind of map them out, that there have been these monthly cycles with a 2-week drawdown and then a 2-week rally, or really it's like a 1-week pullback, 2 weeks flat, and then 1 week up. Something like that. But so anyways, what I'm going to do is I'm going to draw, from the high over here over to the high from here. We saw effectively an 80% drawdown from that high. So this is very risky. Do trade with caution. And then I am just going to, let's see, get the rectangle tool to draw a rectangle for this first half, which let's see. So we don't, I'm going to round to the later date. I have to round it to a date and a day, a trading day. And so I'm just going to do that here. And so we can see that, let's see, just how do I draw this? Let's see, red is the pullback, and how do I want to? Okay, so I'm going to make that background transparent. And so that's kind of, the red cycle there. So we have that mapped out, and I am just going to click on this box and delete that. Oops, I did not want to delete the Fibonacci retracement. I wanted to delete that box. Okay, cool. So that's kind of, the 2-week pullback cycle. Ooh, and what I should have noted here is that we can see that this over here, just to the right of the cursor, just right over there, that's 23 trading days, represents 32 calendar days. So that's about a month from peak to peak. And so that means that it's about 2 weeks from peak to bottom, and then 2 weeks to the next peak. So that's the thesis that I'm working with here. And so now I'm just going to see, I guess I'll do another rectangle, and I'll go from the low over here to this. Actually, maybe I'll just do the lows. So it's got to snap into, maybe what I want to do is adjust this other point to being, let's see, the low is 4.02. There we go. All right, and so I'm going to make this green. I think this is the best green, and I will make that more transparent. So yeah, we have this red drawdown cycle over 2 weeks, and then just to show you, which I kind of already did, but this move takes place over 16 calendar days, so about 2 weeks, and that is an upside move of about 53%, right around there. So we've got that going on. And then one thing I did want to do is I actually wanted to adjust this lower point to 402. I think that's a little bit more appropriate than 403, and then that puts the level here still right around $4.59.4. And yeah, so that's kind of like the first cycle. And so now let's look at this second cycle. Is this about a month apart? So I'm just going to do, same kind of measurement tool from peak to peak. And let's see, going to the bottom. That took 31 calendar days, about 21 trading days, about 4 weeks, and that was a drawdown of about 37%. So we've got that there, and that does look like, very nicely, hit the bottom. And so now what I am going to do is I'm just going to draw another rectangle and draw that to, the bottom there. And lock that into place, color this red, and make that background transparent. And are those, let's see, what kind of red did I make this? I think I made this a little bit brighter. Yes, I'll make this red a little bit brighter as well. There we go. Okay, and so, there is that. So now I'm just going to delete this measurement tool. I'm going to draw another rectangle from the bottom here. Oops. Let's see, get that measurement, or see the rectangle tool from the bottom there up to this top. We can see that this is now going to be a green box. I'm going to make that border transparent and lock that into place. So now that is another cycle. And we can see from the bottom there to the top, that was about a 50% move to the upside. So very nice there. Again, this is just looking really good. So now we've got another kind of, dip and top over here. Let us see if, from the top over here to the bottom, that was a drawdown of about 24%. That's 24 calendar days, 18 bars, still about 4 weeks there. So that does, match. It's a little bit shorter, but I think that the election and also the weekend right before it kind of had an influence on it. Nobody wants to be holding, stuff over the weekend because we just didn't really know what was going to be happening around the election. So I think this, makes sense. This matches the thesis. And so here from that high to that low, I'm going to have to adjust the base of this, but I'll do that here, lock that into place. And so the low here was 488. So, the low here was 4. That doesn't make sense. It doesn't seem to make sense to me. Oh, yeah, I guess the low there on that day, which was right around the close, I thought there was a bigger wick to the downside, but let's see what's the low over here. That was 484, so a little bit lower. So I might actually adjust that, lock that into place. I guess I didn't before, and I'm going to do this. Actually, no, I'll leave it at 488 because that's, the midpoint, following that thesis, even though it did go a little bit lower over here, and over here hit a low of 482. But, I'm just going to leave that there. And now I will delete this measurement, and we can see the next move up here in green. That is transparent border, and lock it into place. So we can see that, and if we do take a measurement of this from that midpoint, that represents a 26% move to the upside. And now, maybe this scheme, this cycle, has shifted because we've broken below, this uptrend. So, I do think that it is a good time to be cautious and whatnot. But if we do take a measurement from the top here to the bottom, that was 14 calendar days, which is 2 weeks, 10 bars, 10 trading days. And so I think that this very well could be the bottom, and that represents about a 46% drawdown from that top. So pretty massive move, and I just feel like that, while I was buying, around 532, this does represent, I think, a good dip buying opportunity, at least as far as my thesis goes, because it's been 2 weeks. And so we have effectively, completed this next red. And actually, maybe I don't want to draw that just yet because I'll have a hard time deleting this thing. I'm going to delete that first. Pretty easy to draw, from the top here to the bottom here, and then to color that red, make the border transparent, and lock that into place. And so, that is what I see. And so now the big question is, where is this going to go over the course of the next 2 weeks? And so from this low, if we were to get up to, right around 460, which, looking at the chart, looking at this and seeing that we've broken below, this seems like the most likely outcome in my opinion, because the kind of like pumps that we've seen in the past have been, more consistently, lower than 66%. I mean, we have seen some pumps bigger than that, but really they've been like 50% or lower, unless I'm misremembering that from what I just talked about. And so, yeah, actually, in case I am misremembering that, since I have done all of this, let's see, let's get measurements of these pumps. And so this pump, I'll just measure all of them, and then we can look at them to see here all at once. And so what we can see from these pumps, and that's really like excluding this big one, I think that that is, kind of, let's see, how many weeks was this to get from that bottom to the top here? That was, 21 days, so that's about a month. So this is like kind of a different, actually though, this is, yeah, this is a different scenario. I was thinking like 2 weeks up to here, then 2 weeks back, and then up. It's different. But anyways, that pump was over 300%. So definitely very different from what we're looking at following this pullback. And so this one over here was 65%, this one over here 51%, and this one over here 25%. So yeah, it's like diminishing returns. And so even though we have, broken below, quite notably, let's say worst case scenario, we just get 25%. Where would that be bringing price from the low here? That would be bringing it to like what we just got. But since we're in the middle of November, we're not at the beginning of December or the end of November. We tend to get the spikes in the UVIX or the VIX right around the beginning of the month. So, I just think that this is kind of like hey, the bottom's in, this is starting to move. Just like, over here, we saw, this move up here, it consolidated more. We had some more pumps before, we got the ultimate top there. So I just think that, these levels here, I should point them out, I guess, 402 was that prior all-time low. I believe it was all-time low, 52-week low, at least at the time. Getting rejected from there on Friday. And then there's also, it looks like a gap here at 407, which has been filled, but now we have these other gaps. So, that's something to consider. I'm just going to make that a solid line because that gap has been filled. And so, yeah, for me, I don't think that this is it. I think that we've got about 2 weeks. And I think that 2 weeks from now, so that's, let's say 14 calendar days, 10 bars here. Let's say we get up to that uptrend, but let's say the midpoint here where that arrow is where we start to get rejected. That'd be around 466. That represents a 42% move to the upside. I'm actually just going to move this down a little bit. So we're being a little bit conservative here to right around 40%. And so that seems reasonable to me, not being too crazy about it. Let's see, before I lock that into place, because like if I were to bring that, if I click on it, if I were to bring that up to the downtrend here to like 550, that's a 66, almost 67% move. And so while I do think that's feasible, I think that this is one that, like for me, I guess what I will probably do if I have 70 shares, if I have more than that, what I might do is set a limit sell right around, and I'm going to do that so it's 10 bars, right around, 460, whatever 10% increment that is from my average. And so I guess I can calculate that. I'll pull up the calendar here, or the calculator here in a second. But before I do that, I am just going to shade this because I think it's fun to have the shading. And so this is kind of my thesis. I mean, I guess that it could come up to here, but, don't want to be too greedy with it. And so, just make that green, transparent background. Okay. And so, my average is, I usually do this in Excel, but I don't want to open that up on the big screen here. So yeah, I'm just going to pull up my position on my phone. Actually, no, I don't need it. I've already got it here. $4.26.4. So I'm just going to pull up the calculator app and we can do some math here. So let's see, $4.26.4 times 1.1 is 469. So for me, what I'm probably looking at is just a 10% swing, nothing too crazy. So if I have 70 shares, I have not done this. Actually, I could do this, while we're here because, maybe I forget later. And so for me, I think I want to place a limit sell at 469. It's also a fun number. And so I'm just going to do 60 of my position. So I still have, a moon bag of 10 shares. So you might hear a beep, maybe not. My volume's not off, but no beep. And then I'm also going to do a sell at whatever would be right around 550 for those remaining 10 shares, which maybe I just hold because maybe the top is here and it pulls back. That's no big deal. I like the UVIX. I like this monthly cycle, so it's no big deal for me. But so let's see. My average, my memory is terrible, so I've got to look at it again. 4.264. And let's see, times 20% gain. It's around 5. Okay, so now I'm going to do 4.264 times, let's see, 1.3. That's around 554. So yeah, I mean that makes sense to me. It's right around 550. Maybe I'm getting a little bit greedy, getting that 4 cents above 554. But I'm kind of one of those people who just like that's what the number says. Just actually, I shouldn't be one of those people that has to put it in as 554 because the calculator tells me that. I should just do it, round that down to 550 or maybe 549 in case it doesn't get up to 550. Actually, no, screw that. I'm just going to do it at, because I'm fine to hold 10 shares. 10 shares, no big deal. It's $55. And really, for me, it's $42.64. And so I'm just going to place a limit sell. Sorry, I do my trades on my phone, so I just don't, for my privacy, I don't want to keep stuff on the screen. But yeah, I'm just going to do a sell. Screw it. I'm just going to do what's on the calculator. I am one of those people. And let's see. Because I'm fine to just hold. But my thesis is that it could be going up there and it could be piercing that level. And so I would think that my order would be filled. And so now let's see. Yeah, I've got a limit sell for 60 shares at 469 and a limit sell for 10 shares at 554. I may change that because, as things change, the market changes. You got to be changing your thesis. But, this just looks really nice to me. I just think that this is a beautiful, beautiful chart. This pattern's really cool that I've noticed, but I just think that there has been kind of a regime shift from breaking below this uptrend. Now I think that's going to be acting as resistance, but if we blow past it and then get back into this, maybe there's some more volatility. I don't know what it might be, but there definitely might be some. And, I just... the UVIX, I've talked about, shorting SPY, shorting semiconductors. That's getting like too niche, it's like too into specific things, whereas this is just like very general volatility, not doing anything with options, or at least not anymore. I would recommend checking out the options video that I will record here in a minute. But I'm going to close this now 32-minute video down. I hope you guys did enjoy, but as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and enjoy your weekend, guys. Take care.